Hello and welcome to BYJU'S Exam Prep IAS. Today we are starting this Indian economy session and we are running this course for Prelims 2024. Indian economy plays a very important role because almost 18 to 24 questions we find usually from this segment. And it has been our endeavor to help you, to assist you with regards to your preparation and fine-tune your overall strategy. So let us start. Which one of the following statements most appropriately describes the fiscal stimulus? First, you need to understand fiscal stimulus. When government gives a stimulus, when economy is in recession, you might have heard of this term stimulus during COVID crisis because economy was down, activities were less, people were confined to their doors, there was lockdown, there was huge disruption in supply chain. So thereby, the question is, which statement most appropriately describes the fiscal stimulus? Statement A, it is a massive investment by the government in the manufacturing sector. The moment it says manufacturing sector, statement would be incorrect because question is not related to manufacturing sector, question is related to stimulus, fiscal stimulus. Government announces a stimulus for the whole sector of economy. Otherwise, it will not be called fiscal stimulus. It will be called stimulus for this sector, stimulus for this sector. So, question is fiscal stimulus. Statement second, it is an intense affirmative action of the government to boost economic activities in the country. If you look at this statement, it is an intense affirmative action of the government to boost economic activity in the country. This would be the correct answer. Third, it is the government's intensive action on financial institutions to ensure disbursement of loans to agriculture, again incorrect. And fourth, it is an extreme affirmative action by the government to pursue its policy of financial inclusion. In normal circumstances also, government focuses on financial inclusion. So you need to focus on the key word of this question, that is fiscal stimulus, and then fourth statement is also incorrect. Answer would be B for Bombay. Now if we take the second question, next question, in the context of international trade, which one of the following conditions make a product eligible for countervailing duty? It is also known as CVD. A, when the product has potential of harming the environment. No, because CVD is a term of World Trade Organization, and World Trade Organization is a trading body, and question is with regards to the international trade. So the moment it talks about environment, statement would be incorrect. Second, when the product has the potential of destabilizing the currency of the importing country. Currency. It is not related to currency war. Question is on countervailing duty. So second statement is also incorrect. If you look at the third statement, when the product has not followed the international sanitary rules, incorrect. And fourth statement is when the product has received unfair advantage through export subsidy in the source country. This statement is correct because countervailing duty is levied against the government. Let me differentiate the two terms of international trade. First is anti-dumping duty and second is CVD. Let me explain this a bit because the question is on CVD, countervailing duty, but it is equally important for other questions as well. And that should be the actual criteria of looking at prelims questions. Questions might not get repeated, but the theme around which those questions have been framed, that theme becomes important. If you look at it, we have exporting country, if suppose for example China, it exports to India, and if it exports to India at a cheaper rate, and second in excessive quantity, means China is aiming at devastating Indian industry, India's domestic market. Either it is selling a product at a cheaper rate or it is exporting in excessive quantity. Now who will do this? One, suppose if a company of China is doing it, a company of China is manufacturing a product and sending it to India at much cheaper rate or in a very excessive quantity, simply to jeopardize India's domestic industry, then in that case what happens is, against company anti-dumping duty is levied. But if suppose Chinese government is deliberately doing it, if suppose it is the Chinese government which is artificially, intentionally giving subsidy to exporters to keep the prices low, cheap, then against China, against that nation, CVD is levied. What I mean to say, this question is related to countervailing duty. Countervailing duty is always levied against exporting country, and anti-dumping duty is levied against the company of any particular country. This is the difference between the two. Now moving on to next question. Neobanks have recently been in the news. What are they? First, a type of differentiated bank providing only current and savings deposit accounts without any credit facility. No. This answer is incorrect. This answer is incorrect. Now, non-banks which are offering a limited range of banking services on a smaller scale, this is also incorrect. An entity that purchases the bad loans of other banks and tries to auction these in the market, this is called Asset Recovery Company, ARC. They are not neobanks. So if three options are incorrect, obviously we are moving to the fourth option, entities providing banking services generally in a digital online only mode. So the fourth option is correct. All three options are incorrect. Neobanks, if you look at the concept, this is a kind of nomenclature which are run digitally, like we have payment banks. Neobank, this name has been derived from the platform on which it runs, not solely on the basis of type of activities that they undertake. Now, next question, if we move on to next question. Which of the following are considered non-tariff barriers? What does that mean? There are two types of barriers. One is tariff barrier, second is non-tariff barrier. When a country imposes excessive import duty, like I am importing from, say, America, and India imposes very high level of customs duty on Indian product, this will be called tariff barriers. But we all know, in the regime of World Trade Organization, no country is allowed to unilaterally increase tariff, because if you do this, you will be taken to WTO, there would be a case against you, and it will be deemed as discriminatory trade practices. So thereby, developed countries, they devised a mechanism that is called tariff barriers, non-tariff barriers. Tariff barriers means raising the tariff. You cannot do that because the receiving country will file case against you. So non-tariff barriers means without touching the tariff, import is restricted. For example, in the name of child rights, in the name of human rights, in the name of child labor, in the name of women empowerment, in the name of, you can say, health concerns. Here on these non-tariff topics, issues, what we are doing is we are restricting the import. These are called non-tariff barriers. Import licenses, quotas on goods, trade embargoes, anti-dumping duty. Now look at the nature of these four options. Which option is talking about not touching the tariff? If you look at this, import license, you need, government may fix a quota on goods. Trade embargo means completely stopping the import. So thereby 1, 2 and 3 answer would be B for Bombay, because anti-dumping duty is to protect domestic industries. So fourth option is not correct, and thereby answer would be B for Bombay, 1, 2 and 3. Now the next question. Consider the following statements with reference to labor force participation rate, LFPR. There are few concepts in the chapter of poverty. Usually we do not find many questions asked in prelims examination, but types of poverty becomes important, labor force participation rate becomes important, trend of poverty, that becomes important, poverty gap or incidence of poverty, that becomes important. So if you are preparing for this prelims 2024, what we need to do is we need to look at those concepts. First, it refers to the proportion of the working population in the age group of 16 to 64. This statement is correct. Means this age group has been considered as working population. We all know that demography or population of any country is divided into three parts. One is 1 to 14, 15 to 64, and third is above 65. And this is how we derive dependence ratio. So first statement is correct. Second, generally labor force participation rate goes down during times of recession. What is recession? And here this recession also is a concept. Recession also is a it is not just, you can say, you cannot just guess about recession. Recession means negative growth for 2 consecutive quarters. So if economy is not growing, or if economy is stagnant, obviously labor force participation rate will go down. So second statement is also correct. In the last decade, India's LFPR has always been higher than 60%. Since 1947, India's labor force participation rate has never crossed 60%. So thereby this statement is incorrect. Answer would be A, only 1 and 2. As I said, whenever you attempt any question of MCQ nature, what you need to do is, related terms are very important, because when you discuss about poverty or labor force participation rate, what are the related concepts that you need to understand? Now moving on to another question. Consider the following statements. In terms of short-term credit delivery to the agriculture sector, district central cooperative banks deliver more credit in comparison to scheduled commercial banks and regional rural banks. If you look at it, scheduled commercial banks, they give almost 70 to 80% of credit to agriculture sector. What does that mean? In any circumstance, in any situation, loans or credit given by scheduled commercial banks will always be higher than district central cooperative banks. So here what we find is, first statement is incorrect. Second, one of the most important function of district central cooperative bank is to provide funds to the primary agricultural credit societies. This statement is correct, because there are 5 major functions of district central cooperative banks. Out of those 5 major functions, this is the first one. Hence, second option is absolutely correct. Answer would be B only. Now, when we find this term, district central cooperative bank, how many types of cooperative societies? How many types of cooperative banks? What is the mandate of priority sector lending? These concepts become very important. Now, next question. Consider the following statements regarding the different indices used to measure inflation. Both wholesale price index and consumer price index capture the changes in the prices of goods and services. You must be knowing that wholesale price index does not include services. That means first statement is incorrect. It is the consumer price index which takes into account goods as well as services. But the statement says WPI as well as CPI. It simply means first statement is incorrect. Second, the Reserve Bank of India has adopted the consumer price index as its key measure of inflation. Yes, RBI has adopted it in 2015. Prior to 2015, it was WPI. But thereafter, RBI changed its stance. RBI realized that it is CPI which is more important, because it is the CPI which directly affects the consumer. So while deciding the monetary policy rates, RBI since 2015 started using CPI as an anchor index. And third is the basket of goods and services used to compare the GDP deflator changes automatically over time. This statement is also correct. Now here in the third statement there is one concept, GDP deflator. Now you need to work on this word. GDP deflator is used to arrest the impact of prices, because if we do not factor into price rise, we might get wrong figures with regards to GDP. Thereby, GDP deflator is used. To derive real GDP from nominal GDP, we use GDP deflator. So, in this question, statement number 2 and statement number 3, so these two statements are correct. So thereby we have answer is C. Now next question. With reference to Indian economy, what will be the impact of rising interest rates on the price of the bond? This is a beautiful question. If interest rate increases, what would be the impact on bond? Very simple thing that you need to understand. Interest rate and price of bond, both are inversely proportionate. If interest goes up, price of bond will go down. And if you talk about bond yield, then if price of bond goes up, bond yield goes down. So price of the bond and yield of the bond, these two, price of the bond and yield of the bond, both are inversely proportionate. Likewise, rate of interest and price of bond, these two are also inversely proportionate. Now, why it is inversely proportionate? Suppose X bought a bond at the rate of say 3%. That time rate of interest was 3%. But now, after 5 years, X wants to sell this. Now imagine if now after 5 years interest is say 6%, who will buy this bond at 3%? Are you getting my point? If interest rate in the market is going up, then X has to lower the price of the bond, then only he would be able to sell it in the market. So now look at the options. Price of the bond may decrease with increasing interest rates. If you look at the first option, this option seems correct, because may decrease. If I am to sell my bond, I will have to lower the price because now rate of interest has gone up. Second, interest rate will have no impact on the price of the bond. Incorrect. It will have impact. Surely it will have impact. Third, price of the bond will increase with increasing interest rates. No, incorrect. Price will fall. And fourth, price of the bond will first increase and then decrease after a threshold. This statement is also incorrect. So thereby B, C and D, these three options are incorrect. Answer would be A. Moving on to another question. In the context of Indian economy, which of the following statements best describes the term cascading effect of taxes? First of all, what do we mean by cascading effect? It happens due to double taxation. And we all know that government carried out multiple tax reform in the field of indirect taxes, and last reform that we find GST in 2017. To eliminate this impact of double taxation and the cascading burden. When the double taxation, the impact of double taxation rolls over to subsequent stages, that is called cascading effect. Look at option 1. It is a situation where an increase in direct taxes will have a negative impact. Incorrect. Because cascading effect happens in the field of indirect taxes. It is a situation where taxes are levied at each stage of production or distribution, resulting in the price rise of the product. Absolutely correct. At every stage we are levying taxes. This is what double taxation is. So thereby option B is correct, and it is a situation when the rise in particular tax will also increase other similar taxes. Incorrect. It is a situation where tax imposition on products leads to higher levels of inflation. Incorrect. Cascading effect means double taxation. And when there is no input tax credit, when producers cannot claim on the taxes paid by him during the course of production from the final tax liability. So double taxation leads to cascading effect. Answer would be B for Bombay. Now in this topic of cascading effect of taxes, you need to work on multiple indirect tax reforms, starting from say Man-VAT, Mod-VAT, Sen-VAT, then we have GST, then we earlier in 2005 we have VAT. How it became so important for the government, and why double taxation, elimination of double taxation became a talking point to eliminate cascading effect. Moving on to next question. Which of the following policy actions can be considered as a move towards capital account convertibility? First, understand capital account convertibility. For the purpose of international trade, we have two accounts, current account and capital account. Current account has been made fully convertible, and capital account partially convertible, and this was done in 1993 when we started with economic reforms in 1991. Now look at the first option. Increasing the foreign portfolio investment limits in the Indian debt market. B. Easing of the external commercial borrowing framework. C. Liberalized foreign direct investment. If you look at these three options, more and more foreign portfolio investors should come to Indian market. Why at all we do convertibility? To attract more and more foreign investment. And convertibility means the ease with which we can convert our assets into the assets of some other country. So if you look at these three options, attracting more foreign portfolio investment, now external commercial borrowing framework has been eased, Indian companies can borrow more under ECB route, and third, liberalized foreign direct investment, again attracting FDI. These three would be the correct answer. So 1, 2 and 3, C is the correct answer, because the fourth statement, limiting NRI investment in government securities, that means you are blocking foreign investment. So it is against convertibility. It is not for convertibility, it is against convertibility. So thereby, answer to this question will be C, 1, 2 and 3. These three options are correct. Now, which of the following statements best describe the situation of unemployment trap? A. It is a situation in which a casual labor finds it difficult to get out of indebtedness due to insufficient income. No, unemployment trap has nothing to do with indebtedness. So first option is incorrect. Second, it is a situation in which cost of going to work is lower than the income received. Incorrect. Third, it is a situation when unemployment benefits discourage the unemployed to go to work. This statement is correct, because if government gives large amount of subsidies, if government provides large amount of cash transfers, people may be discouraged, because good amount of monetary benefits, good amount of government support they are getting at their home. Why to need for any work? So option would be, correct option would be C. It is a situation when unemployment benefits discourage the unemployed to go to work. And if you look at India, and in Indian scenario you have Manrega, cash transfers, and if you study the cost, the reasons behind food inflation in India, Manrega is cited as a very important factor, because cost of labor has gone up. While you are at home in your village, you are earning your daily wage. Now if someone wants to hire you for farm work, if someone wants to hire you for, say, construction work, you will ask for more. Thereby, cost of labor is going up. And option D is also incorrect. It is a situation in which an employee is forced to work without wages. Incorrect. So in this question, option C is correct, when unemployment benefits discourage the unemployed to go to work. Moving on to next question. With reference to the different types of poor, consider the following pairs. chronic poor. A person who is poor for most part of his life. Correct? Absolutely correct. Occasionally poor. A person who is poor but may sometimes move above the poverty line. This is not occasionally poor. A person who is poor but may sometimes move above the poverty line, they are called usually poor, not occasionally poor. So this option is incorrect. Churning poor, a person who regularly move below and above the poverty line. This option is also correct. So first and third, these two pairs are correct. So answer would be D for C, option number 1 and option number 3. If you look at the NCERT 11th class economy, in that chapter you will get this question directly from the flowchart. A diagram has been there in the NCERT. Consider the following statements with reference to the priority sector lending norms in India. PSL norms started in 1967. What are the PSL norms? If you look at this, in 1965, 1966 and in 1967, India was suffering from a massive drought, famine. As a result, industrial output had gone down. As a result, it had a very devastating impact, negative impact on MSME sector, on cottage industries, on self-employment. Then government, to rejuvenate and revive those sectors, government came out with this idea of priority sector lending. From time to time, government identifies certain sectors as priority sector, and accordingly, banks and financial institutions are mandated to disburse loans to those sectors on priority. Let us look at the option. Option number 1. It is mandatory for all scheduled commercial banks to lend 50% of the adjusted net banking credit to the priority sector. It is not 50%, it is 40%. And 40% was made in 1985. When PSL was started in 1967, it was 10%. And in 1985, it was raised from 10% to 40%. So this option is incorrect. It is not 50%. Second, loans to large-scale farmers qualify for classification under PSL. Large farmers are not included because, as I told you, the basic objective of PSL was to support MSME, small scale, marginal farmers, not the large scale farmers. So second statement is also incorrect. Third, small finance banks and local area banks are outside the purview of the PSL rules. Incorrect. They are not outside. They are very much inside. And for them, PSL is even higher, 75%. For regional rural banks, PSL is even higher. So, answer to this question will be none. D for Delhi. All three statements are incorrect. Moving on to another question. Consider the following statements. Statement 1. Sterilization by the central bank boosts liquidity in the economy. Sterilization by the central bank boosts liquidity in the economy. No, it arrests liquidity from the economy. Second, the central bank sells government securities to commercial banks as part of its sterilization operation. So second option is correct, second statement is correct, first statement is incorrect. Central bank sells government securities. Here government securities are sold. Here cash or money or liquidity is collected. If central bank is collecting liquidity, obviously it will not boost. It will contract the liquidity position in the economy. Thereby, option 2 is correct, option 1 is incorrect. Answer would be D for Delhi. Statement 1 is incorrect, but statement 2 is correct. So thereby, in this question, statement 1 incorrect and statement 2 correct. Now moving on to another question. Which of the following statements best describe the term liquidity trap? First, the phenomenon when food prices rise more rapidly than the prices of other goods and services. Second, it is an economic cycle characterized by slow growth and high unemployment rate accompanied by inflation. Third, it is a situation when expansionary monetary policy does not increase the interest rate and does not stimulate economic growth. Fourth, it is a situation whereby the government cannot meet its deficit without printing fresh currency. These are the four statements. Very easily you will understand if you know what is liquidity trap. Liquidity trap means liquidity is flowing, but there are no takers. Central bank has decreased key rates. Central bank is following expansionary monetary policy. And we know that what happens in expansionary monetary policy. Central bank lowers key rate, CRR, SLR, repo, reverse repo, open market operation, all rates are lowered. But people are not interested. That is why if you look at the third statement, that is correct. Monetary policy is expansionary, rates are lowered, but it is not increasing the interest rate and does not stimulate economic growth. Because government or the central bank is following expansionary monetary policy. Because central bank is of the opinion that if rates are lowered, people will borrow more because loans are available at cheap rates or cheaper rates. But if that is not happening, rate is lowered, but there are no takers, that situation is called liquidity trap. So option A incorrect, B incorrect, D incorrect. Answer would be C. Cheap monetary policy is not leading to desired economic growth. Now moving on to another question. Consider the following statements with reference to cess and surcharge. The Constitution of India gives the authority to the Parliament to impose a surcharge. Article 271, if you look at this, empowers Parliament to levy surcharge and cess. So first statement is correct. The proceeds from cess are exclusively spent on earmarked purposes. means for the purpose for which cess was levied, it has to be spent for that purpose, on that purpose only. So this statement is also correct. Third, unlike cess, the entire proceeds of surcharge form part of the Consolidated Fund of India. This statement is incorrect because here there is a term called unlike. Cess and surcharge both are actually deposited with Consolidated Fund of India only. So thereby third statement is incorrect. Answer would be B for Bombay, only 1 and 2. Now moving on to another question. With reference to ways and means advances, consider the following statements. It is a facility for both the central and the state governments to meet temporary discrepancies in their revenue and expenditure. Absolutely correct. Because WMA was introduced in 1997 in place of ad hoc treasury bills. This was started as part of inculcating a sense of fiscal discipline in government's borrowing, because prior to 1991 government was borrowing heavily internally from its internal sources, say for example through SLR, through open market operations. Government was borrowing heavily, and that was creating overcrowding effect or crowding out effect in the economy. That is why WMA was introduced. Under WMA, what happens? It is an agreement between RBI and the Government of India that in case of government requiring some money urgently, then it will not borrow from commercial banks. It will borrow from the RBI directly, which has to be paid back to RBI within 90 days. And if government fails to pay it back within 90 days, 2% additional rate of interest would be levied on the government. So WMA was part of inculcating fiscal discipline in the government's internal borrowing or government's finances, because we all know in 1991 India suffered a financial crisis. It is known as balance of payment crisis, and then as part of International Monetary Fund directives, Government of India carried out multiple reforms. WMA was part of one such reform. Second statement, the government cannot draw amounts more than their WMA limits under any circumstances. Look at these such statements. Whenever you have under any circumstances, automatically such statements are incorrect. Because one, government is sovereign. It can borrow if there is a war, if there is some exigency, if there is some natural calamity, if there is something that is unwanted, uncalled for, unforeseen, government can borrow. So nobody can put any limit on the sovereign to meet some extraordinary circumstances. So thereby second statement is incorrect. Third statement, interest on WMA is charged at the existing repo rate. This is correct. Whatever is the repo rate prevailing in the system decided by the Reserve Bank of India, rate on WMA is at par with that repo rate. So first statement correct, third statement correct, answer is C, only 1 and 3. Now next question. Consider the following: currency in circulation, bank reserves, demand deposits, certificate of deposits. How many of the above are included in the monetary base of the Indian economy? Out of these four, which one or which all are part of monetary base? Currency in circulation and bank reserves. Because demand deposit is not the monetary base. Demand deposit means two types of: current account and savings account. It is a liability, not the monetary base. Certificate of deposit, these are debt instrument. Though these are of short term in nature, so these two are not the part of monetary base. So answer will be B for Bombay, only 1 and 2, currency in circulation and bank reserves. Moving on to another question. Which of the following could be the possible implications of adopting a contractionary monetary policy? Contractionary means opposite to expansionary. In expansionary monetary policy, RBI lowers key rates, but in contractionary monetary policy, RBI increases key rates because RBI wants to absorb liquidity from the system because of inflationary pressures, because of inflationary tendencies. To bring the prices down, RBI follows contractionary monetary policy. Look at the first one: decrease in rate of inflation. Decrease in the rate of inflation. Possible implication: yes, rate of inflation will go down because money has been sucked out of the system. So this implication is correct. Rise in aggregate demand. It can never happen. When money has been made costly, how come demand rise? Because if money is costly, there would be very less borrowers. If borrowing is less, obviously demand will also be less. So this is incorrect. Decline in aggregate business investments. Correct. Because business investments are based on out of the pocket investment as well as borrowing from the bank. But now borrowing has been made difficult by the RBI because now it is following contractionary monetary policy. So third statement is also correct. Fourth, increase in rate of employment. No. If investments are going down, establishing new industries, new ventures, if that is difficult, obviously it will have negative impact on employment opportunities. So if you look at it, answer would be 1 and 3. First statement is correct, third statement is correct, second and fourth statements are not correct. Moving on to another question. Which one of the following statements best describes the term lightweight payments? Lightweight payment, this concept was introduced in June-July 2023. If you know the concept of lightweight payment, very easily you will find the answer. Conventional modes of payment, they require good amount of hardware support, good amount of software support, and good amount of staff support. That might not be possible in case of natural calamity. That might not be possible in case of any emergency like war. That is why lightweight payment system has also been called as bunker. Minimum staff you need. Obviously, transactions on which no fees or charges are levied, incorrect. Payment system that can be operated from anywhere by a bare minimum staff. This statement is correct. Third, trade related settlements that can be done within 24 hours of the completion of a transaction. No. The disbursement of payments with the help of United Payments Interface or Unified Payments Interface. No. So for this question, answer is B for Bombay. Minimum staff, it is like a bunker, and it has been devised keeping in mind India's diversity, India's wartime requirements. Hence, it has been implemented. Moving on to another question. With reference to the taxation in Indian economy, the term reverse charge mechanism means A. The supplier of goods or services is liable to pay the tax, incorrect. Exemption of both the buyer and the seller from any tax obligation, incorrect. Both the buyer and the seller are liable to pay their share of tax, incorrect. And last, the receiver of goods or services is liable to pay the taxes. Fourth statement is correct. Now, reverse charge mechanism is a unique feature of GST. Here you can see receiver of goods or services is liable to pay the tax. Earlier what was happening? If I received a consignment, it was on the sender who is sending me that consignment. I will pay only my share of tax. Under GST reverse charge mechanism, or it is also known as invoice matching, this unique feature was introduced, which is known as top to bottom approach of tax reform. It is also known as invoice matching. Now, if I have to pay all the taxes, the goods, the services that I received, that simply means I will ask the vendors to pay his or her share of taxes. Why will I pay his share of taxes? So if I force them to pay taxes and I declare their details, their GST number, their PAN, to the income tax department, to the government will catch them. So this is a unique feature, though it has been criticized on the ground that it has increased tax compliance burden. It has increased that burden because now I have to pay taxes for all the vendors, from everyone I received any kind of goods or services. But it is a good feature, unique feature, and it will actually plug a very big gap and bring down the tax evasion. Now, moving on to another question. With reference to the standing deposit facility, consider the following statement. SDF, standing deposit facility. First of all, it was recommended by Urjit Patel Committee. In 2014, and in India it was first implemented in 2018. Now look at the statements. It enables commercial banks to park excess liquidity with the central bank without any collateral. And that was the purpose of SDF. 2018, if you remember that period, in 2016 there was demonetization. And almost more than 90% currency in circulation that came back to the banks. Now RBI feared that since now banks have excess liquidity at their disposal, they may try to go for cheap lending. They may try to go for, you can say, easy lending. That is why, to absorb that excess liquidity, SDF was introduced. So first statement is correct. Unlike the reserve repo rate mechanism, access to SDF is available at the discretion of commercial banks and not the central bank. This statement is also correct. So in this question, both the statements are correct, both 1 and 2. Answer would be C. Here one additional point I would like to highlight. SDF is for liquidity absorption. And opposite to SDF is MSF, Marginal Standing Facility, which was started in 2011 for liquidity injection. So opposite to SDF is MSF. Moving on to another question. Consider the following statements with regards to Indian economy. Statement 1. In times of deflation, the Reserve Bank of India lowers the marginal requirements for banks in India. Second, statement 2. A lower marginal requirement leads to decline in total loan demand in the economy. First of all, what is marginal requirement? Marginal requirement is the difference. Market price of a product, suppose 100 rupees, and whatever loan you are taking from the bank, suppose 70 rupees. 100 rupee is the price, 70 I am getting financed from the bank, difference is 30 that I have to pay from my pocket, right? This 30 will be called marginal requirement. In any kind of borrowing, in any kind of financing, in any kind of credit, usually banks, they do not give 100% of the market value of the product. Like if you go for housing loan, you will find that banks will fund say 80% of the price of your flat. 20% you have to pay from your pocket. That 20% you are paying from your pocket, that is called marginal requirement. So if marginal requirement is lowered, of course total demand will increase, it will not decline. Suppose I am buying a property worth 10 crore. Earlier banks were giving me 6 crore. 4 crores I have to put from my pocket. Now marginal requirement has been lowered. Say bank is giving me 9 crore. Now I need only 1 crore. So demand will go up. It will not decline. So second statement is incorrect. Now first statement, in times of deflation, deflation means fall in prices. Across the sectors. So if prices are falling, what would be the primary objective of a central bank? To boost demand so that people come out, They go to the market, they make demand. And to facilitate people in making their demand, RBI does what? Lowers margin requirement. So first statement is correct. Because here the primary concern is how to increase the demand, because the economy is showing this deflationary tendency. So in this question, answer would be C. Statement 1 is correct, but statement 2 is incorrect. Now, last question of our Indian economy day 1. The Financial Services Institutions Bureau, recently seen in the news, has replaced which one of the following organizations? First, infrastructure, leasing and financial services? No. Credit information companies? No. Deposit insurance and credit guarantee corporation? No. Then obviously the answer is Bank Board Bureau. And former Comptroller and Auditor General of India, Mr. Vinod Rai, was the first chairperson of Bank Board Bureau. And in 2016, Bank Board Bureau was established under Mission Indradhanush. Means seven-pronged strategy for reforms in public sector banks. That is called Mission Indradhanush. So here in this question, answer is D, that is Bank Board Bureau. So friends, thank you so very much for the first day. See you tomorrow, same time. Thank you so very much.